The US dollar is weaker in trading today, with the euro versus US dollar leading the way to the upside for that currency pair. It is up 0.8% versus the greenback. The British pound is up 0.3% with the US dollar weaker, and the dollar versus yen has moved about the same amount as the British pound, with the dollar moving lower against that currency pair. I'll go through all the technicals that are driving these three major currency pairs to start the US session and trading here today. So let's get started. I'm going to start by taking a look at the hourly chart of the euro versus US dollar, because I want to focus on what we did yesterday. In yesterday's trading, we extended toward this swing area. The swing area was a ceiling area going back to January, and the market moved up to the low of that swing area, rotated back to the downside, which also happened to include the 100-day moving average. That's a blue line in this chart. Rotated back higher, and this time breaking to the upside before rotating again back to the downside. So lots of failure around the 100-day moving average, around this swing area near the 1.0527 to 1.0532 level. Finally, the price made another break to the upside here, and this time we saw increased momentum to the upside, taking the price up higher on the day. And trading here today, we moved a little bit lower in the Asian session based in this area right here. And to see the importance of that, you need to go to the 4-hour chart of this currency pair and go back to this period through here where we had a lows and then highs and then highs, and one false break here before the market reestablished resistance against the high of this area right through here and moved to the downside. So this area was a significant level. We broke above it, came back down to it, and then rotated to the upside. That move to the upside is now, in trading here today, is now taking the price above the 50% retracement, and the move down from the September high to the January low. That 50% comes in at 1.0695, and also stretched up toward the green line right here, which green line represents the 200-day moving average. That comes in at 1.07258. Got within 4 pips of that level and rotated back to the downside side, trading above and below the 95 level. But as you can see, we're currently back above the 95, currently trading at 107.11 to start the U.S. Trading session. Get above the 200-day moving average, and that opens the door for a move toward this swing area up here between 1.067609 and 1.0776, and move above that, and we'll start to look toward the 61.8% retracement. Of course, the 200-day moving average could prove to be a problem. It tends to be. So pay attention to that. We could see willing sellers leaning against that level with hopes that the price rotates back below the 50% retracement, and then this time is disappointed in the move and starts to perhaps move back toward this swing area right through here, which comes in at 1.0592, right around the 106 level. So be aware of that possibility as well. Let's take a look at the dollar versus yen, and for this currency pair, we'll look at the 4-hour chart. And if I were to go back to the September low right through here, the move up from that September low to the high price that we saw in 2025, the 50% midpoint of that move comes in at 149.22. Now the price is traded above and below that 149.22 level on a number of different occasions in trading last week, and in trading this week as well. You can see the ups and downs around that level. So it's not exactly being a decent tactical level that traders are leaning against. But there was this low right here. Maybe you can call these lows right through here as times when the price tried to hold that level. In trading here today, we did move a little bit below that level, 149.22, and now back above. And I still have to respect that 50% level as a bias defining level. So being above it is more bullish in the short term here for the dollar versus yen. Let's take a look at the hourly chart to get a view of it from the shorter term perspective. And here's the 22 level. You can see the little dips below, currently trading at 35, which doesn't seem that far away from this, given the scale of the moves for this currency pair. On the top side, we do have the 100-hour moving average. That's a blue line, and the green line represents a 200-hour moving average between 149.65 and 149.82. We did move above the level in the Asian session here, but we did have Bank of Japan officials kind of chirping about the possibility that the Bank of Japan would continue to raise rates, maybe not at every meeting, but that seemed to put a damper on the upside for the dollar versus yen, as did the overall dollar selling. And we saw the price rotate back to the downside with the 50% retracement, trading above below 50% retracement. So there's a little bit of a battle going on between the 50%, 100, 200-hour moving average. We're going to need to get above those two moving averages on the top side to increase the bullish bias for the dollar versus yen. As you can see, we're still nearer the lows, whereas the nearer the lows for the dollar versus yen. So be aware of that dynamic as well, that the pressure seems to continue to be on this currency pair. Finally, let's take a look at the sterling versus US dollar, and like the euro versus US dollar, we are stretching to the upside. This is the 4-hour chart. In trading this week, early on Monday, the price came down to test the 100 bond moving average on the 4-hour chart, extended above the 38.2% retracement, moved down from September high to the low price that we saw in January, and also moved above the 100-day moving average. We did that in trading last week as well, with the price trading above and below the 100-day moving average, but closed the week back below that 100-day moving average. This time we saw increased momentum to the upside, which took the price higher, and ultimately also above the 50% retracement in trading here today, and the 200-day moving average here. Note here that the 50% retracement did hold support on this little move back to the downside. So that's good news to stay above these two key technical levels between the 66 level and the 87 level. So be aware of this level as support now. We have to stay above it to keep the buyers firmly in control. On the top side, we have this little target area defined by a swing low here, swing low right here, broke below this level, and use that level as a swing high right through here. So the market remembers that dynamic, and we move just a little bit above that level, rotated back to the downside. That area comes between 1.2830 and 1.2843. Get above that level and stay above the level, opens the door for a move toward the 61.8% retracement on the top side. It would take a move back below the 50% retracement to dissuade the buyers from the upside bullishness that we're seeing in this pair. But key break of the 50% and 200-day moving average in trading here today keeps the pound versus US dollar a bullish bias. You can't ignore that. My name is Greg Michalowski with the technical look at to kickstart your US trading day. Good fortune with your trading. Bye-bye now.